Good evening, everyone. All right. Attendees are streaming in. He's having a good meeting. Ethan here from Investing Note. Right. Of course, today we have two special guests. Desmond. Leong, I've known him for a couple of years. He's the CEO and the founder of. Right. Oops. Attendees are streaming in. Oops. He's having a good meeting. Ethan here from Investing. It's my other computer. We're on the live, right? Just to ensure that we're on YouTube live as well. Okay. Okay. So good evening, everyone. Thank you all for joining our webinar on trading ideas commentary today. Right. Today we have two special speakers. Of course, Desmond Leong, who is the founder and the the CEO of Everest Fortune Group, right? An award-winning research house, right? And we also have Mr. Marcus Ng, who is the Vice President at Societe Generale. All right, so before we start this webinar proper, let me do a quick commentary on what's going on our active trading tournament, right? Let me share our screen. Very quick run through on the tournament status right now. So of course, guys, this is the biggest trading tournament of the year, right? So right now we are at the last week of the elimination round. So this tournament, if you guys didn't already know, we have elimination round and a final round where only the top 10 of the elimination round will battle it out from the 1st of October to the 22nd of October. All right. So let's take a look at who is ranking at the top 10 right now. So this is updated as of 5/17 today, right? As you can see, if you look at the first guy, his total portfolio return, it's 316.44%. All right. And the second guy today, he actually jumped 5 rankings up to the second position, right? Maybe you want to take a look at 6 and 7 as well ranking, right? These people jump close to more than 19 and 24 positions respectively. All right. So do you know that in our webinar page, our simulation page, you can actually click in to see exactly what they traded to actually get this kind of total returns, right? So our tournament started on the 13th of September, right? So we are actually 2 weeks in. So today, this week is the start of the final week. Okay, so whatever you see here are the portfolio returns of 2 weeks. Okay, so these are the people that actually had the daily top trades. And for this category, it means that you will need to have the biggest realized profit among all the 3,000 other participants in this tournament. All right. So these are the people who are getting $60 capital voucher, right? So I'd like to bring your attention to this guy. So it's a familiar face. You know why? Because if you paid attention to my earlier slide, he's actually number 1. So his biggest trade is actually Sense Short DLC, right? So on that trade alone, he garnered 300+% returns on that. So let's go and take a look at his tournament portfolio, right? So these are the transactions that he have made, right? So breaking it down further, we noticed that he actually bought the short Sense DLC on the 13th of September, which is the first day of our tournament. I think that actually coincided with the news that China is going to clamp down the casinos in Macau. And for those people who are not familiar with Sense, right? So Sense is actually a company which is dealing with casino in Macau. Okay, so he actually coincided with that, and he actually closed that position on the 20th of September, which is somewhere last week. All right, so he locked in his position, and that gave him more than 300% returns on the portfolio. So this is all happening in 1 week. This is pretty exciting. So for those listening right now in this webinar, right, I urge you to just put in the trade and see whether your views are in line with whatever you're trading. All right. So do take note that actually it is possible to be number one as well. Of course, to win, you need to have minimum 4 trades lah. Okay. So let's move on to what the top 10 guys. Sorry, what are the top 10 guys trading mostly? All right. So of course, one pattern here is that everybody seems to be on the short side of things, right? Sands short, Kuaishou short, Geely short, Alibaba short, Sunac short, Xiaomi short, Galaxy Entertainment short as well. So if you take note on the ticker code, right? So it might be for some people, I mean, from feedback, right? Some people actually said it's quite hard to actually remember all these numbers at the back. So what I recommend you guys to do, right, if you want to see the exact DLC, right, is to actually remember that 4 alphabetical ticker instead, like DSSW. So when you type it in the investing note platform, right, it will pop up. Okay, so these are the patterns of what the top 10 guys are actually trading actively. All right, so they happen to be mostly Hong Kong underlying stocks as well. All right.
And Ethan, you don't need like a 300%, right, to proceed to the next round. It's only you only need 90%, right? I think the last guy was at 90%. So if you make more than 90% this week, you can proceed to the final round, right?
Top 10, yes, he's actually very right. So there are different strategies to actually play in this tournament. Okay. Right. So I'd like to remind everybody that, of course, if you make just 3 trades, buy is one, sell is one, buy is another one. All right. So you are actually eligible to our Apple iWatch Series 6. All right. So we're giving out an Apple iWatch Series 6 worth $500, to people who actually, of course, is standing a chance to win, to actually make just 3 trades. On top of that, if you register for the tournament, for those people who are not already in the tournament, we're giving out 2 winners for Apple AirPods Pros and 1 MBS staycation. And if it doesn't excite you, you can actually go for the daily capital land vouchers if you're good enough to actually lock in your the highest realized profit amongst all the other 3,000 participants. All right. So we have 1 week left. All right. So the question is, will these top 10 actually be transiting in the final round, or are they better traders waiting to emerge? So I remember very clearly last year, right, the top 10 from the day before and the top 10 the last day, right, actually they had some shift in numbers. So we will be monitoring them very closely, and I urge all our audiences to actually look at what they trade as well, right? So how to look at what they trade? There's a quick link. There's a quick QR code here. Take out a handphone and just scan it. All right. And just a reminder for everyone, elimination round actually ends this week, this Friday. This is the last week to actually trade. Okay. We have 4 days left, right? And simply place a trade and you could win. Okay. I'll put the link in the chat box later so that everybody can access as well. Okay. Without further ado, this is the trading ideas commentary, and I'll pass my time over to Desmond. Desmond, time is yours.
Hey, thanks, Ethan. I'm just going to share my screen with you guys. Right. Let me share my screen. Okay. I'm going to share this screen. I'm going to share. Okay. Okay. I'm just checking if everyone's able to see my screen now. Okay, is everyone able to see my screen? I got 2 monitors set up, so it's a little bit messy. All right. Okay, so today's session, right? Today's session, what's good to trade, right? I kind of want to encourage everyone. I have a chat open by the side. So if you have any questions you want to further clarify with me on the stuff that we're looking at today, especially the ways that we analyze, please send them through. I'll do my best to answer them within the time limit. All right. So anyway, without further ado, I'm going to I'm just going to share with you guys today, not only what I feel are the good things to trade, because as you guys know, as Ethan shared, right, we are in the last week of the trading competition, or rather in the elimination round. So my focus is to look at explosive moves, right? Those that, if you get it right, it might nudge you into the top 10, right? So this is what I'm going to look at today. Okay, so I'm going to share with you some of the ways and techniques that I use, so that at least through this webinar, you also learn some of the ways that I analyze markets, right? So really quickly, if I can share with you guys, right? I run Everest Fortune Group. Okay, we're finalists for 2019, 2020, and 2021 for best FX and best equity research. So we usually provide research to banks, brokers, treasury departments, and on radio. Right, a little bit more about me. Right, on my focus on this, my focus on my love and passion with technical analysis. Right, your host for today, Desmond Leong. I'm going to tell you everything you need to know about me in 10 pictures. Right, so if you want to find me on Instagram, you can find me on Comfy Desmond. Right, most of the time you just find my cat over there. All right, yeah, happily married with my wife. Right, you might have seen me on the presenting for Mumu, for Mumu Trade, also arranged by Investing Note. And another bull that another broker with a bull, right? XM, we're the official educators in Singapore for XM. Okay, might have heard me on CNA or on the Money FM events. Okay, right, and we have collaborations with Dollars and Cents and IG, for sharing with you guys what a day in the life of a trader is, right? And along with that, we run the webinars and education for XC. And for those of you guys who trade with IC markets, we run the analysis and webinars for IC markets too. Okay, now a few things I want to touch on today really quickly. What methods do we use? A checklist of our technical analysis. Then a lot of you guys are going to be asking, what timeframes should you analyze on, right? Especially and try and catch these explosive moves, right? The H1 time frame, H4 time frame, day or weekly. I'll be sharing with you a little bit of insights on that. I'll be showing you how kind of scan for stocks, to identify high probability kind of setups, right? We'll go through some live analysis together, stick my neck out for making some calls. If it works out, it's great. If it doesn't, hopefully Ethan doesn't replay this, right? And lastly, using DLCs for that leverage return, I'll be passing the time on to Marcus, right? Who will show you guys how to use and really utilize DLCs, to get that really, really good leverage returns that you're seeing in the trading competition. All right. So first and foremost, right, I'm just sharing with you guys, this is our EFG approach, the kind of approach that we've used to win so many awards, right, multiple times for best technical analysis, right? It's a it's quite in-depth, right? Feel free to go and learn it, right? We share this with many other people too, right? And a lot of it revolves around, we have a checklist process, right? It's a very, very heavily technical approach. Okay, so if you're into technical analysis, you're into charts, right? That's what we're really good at doing, right? But if you're into fundamental analysis, that is not my strong suite. Okay, so anyway, if you want to take a look at this, I'll be showing you some of this as later, where I check off different check boxes to decide what is good to trade. I encourage you to use this, in your own trading tool. I think in the previous trading competition, right? In the previous DLC trading competition, or is it the first one? Right? We actually measured the amount of calls using pure technical analysis that hit the profitable target, and I think it was about 73% or something, right? So using TA alone, especially when you combine it with DLCs, can lead to some pretty interesting returns. Right, so right, I'll be sharing with you a little bit more about this later, right? I think yes, we should be sharing the slides with you guys later. Okay, now some of you guys, one of the most common questions I get asked is, what is the ideal time frame? What is the ideal time frame to trade, right? So to take things into consideration, right? There are many time frames. There's the small time frames, talking about the 1, 3, 5, 15 minutes, 30 minutes. Let me see if I got my handy dandy little pen here. Yeah, there you go. You got the small time frames over here. You got larger time frames, and then you got the days which stretch on for quite a long period of time. So one of the key questions that we need to ask ourselves is, how long do you intend to hold a trade, right? If you intend to hold a trade, right, for a couple of days, right? If you intend to hold a trade for a couple of days, usually, which is what like DLCs tend to be pretty good for, right? You want to look at the time frames that anywhere from the 1 hour to 4 hours and maximum 1 day. Okay, I tend to gravitate towards a 4 hours and 1 day for a clearer picture. Okay, if it's intraday, right, meaning you're looking to hold and close the trade within the day itself. Okay, one of the good things that you can look at is probably from the 30-minute onwards to the 1 hour. Lowest I would go is the 15 minutes. Okay, the reason for this is because the more the small time frame you go, the more granular the data, and usually it's more effective when you're trying to trade the your how long you intend to hold a trade is shorter. Okay, so a rule of thumb I always go with is that you're holding trades anywhere from 1 day to a couple of days. The charts that tend to be pretty good are the 4-hour charts and the 1-day charts. Okay, sorry, just taking a look at some questions here. All right, now let's move on from here. Okay, let's move on from here. Scanning for stocks. All right, scanning for stocks. I have a 3-step approach when it comes to scanning for stocks. All right, first you go through a list, right? So why it's important to kind of go through a list, or rather what I call go through a watch list, which I'll be showing you later, is that you do not want to compromise on your entries. Okay, you don't want to compromise your entries. If it's just keep cycling through a list, the difference between, in this case, stocks is that you, especially DLCs, you got a wide range of them to select from, right? So go through a list and go through the charts and see which ones, which ones meet your criteria. So don't compromise on your entry conditions. That's the first thing I do, right? The second thing is the trend is your friend. Okay, I know it's often a little bit overused, right? It's a little bit overused, like the whole trend is your friend thing, but it is, it is true, right? It's better to trade in the direction of a trend, especially, right? And if you're looking for explosive moves, so one of the reasons why you notice that a lot of people, and just giving you a little bit of psychology behind, why you're seeing so many people short trades, right? It's because in a stock market, you can see it take years and years and years to kind of climb, right? But then if there's a bad news event, right, or if there's there's something that spooks the market, that's where you see the stocks plummet, right? And it can go down really fast because there's a lot of emotions there is when it comes to getting rid of your positions, right? So that's sometimes if you're looking at long and short positions, right? If we really consider that, okay, Friday is the deadline for the eliminations, we want to play a little bit more. We want to catch large moves, right? The large moves are more likely to occur in the short trades, right? Because of all the emotions that are all the emotions that come with people, panic selling, right? You don't really see people that much of panic buying these days, but it's more panic selling that really drives, gives you those large moves. So this is one psychological insight when it comes to looking at the charts. You want to catch the large moves. Short selling, in this period of time might be your way to go. Okay. But yeah, anyway, the trend is your friend. I'll be showing you some ways we use technical analysis to get into these kind of positions, right? Then lastly, we, after doing the analysis, we look in the entry opportunities. Okay, so some of the ways that I kind of scan, right, I'll be showing you right here, right, is that, of course, if you go to SocGen DLC, products and DLCs, you can actually find, right, the whole range of DLCs over here. So in this, for today, what I'm going to do is I actually click the underlying, right? I click the underlying and I go through all the different lists of the different underlyings that you can do analysis on, right? Because remember, right, the DLCs basically move according to the underlying, right? So sometimes you don't need to confuse yourself too much by looking at this, trying to do analysis on the DLC. What you should do instead is you focus on the underlying. So if you're going to trade DBS, you're going to trade Genting, you're going to trade Geely, right? You look at the stock, you analyze the stock, and then you use the DLC to execute. So I'll leave that to Marcus to kind of explain a little bit more on, right? But first and foremost, how I kind of filter all these DLCs is I come here, I kind of go through all of them, right? As I go through, I pick one of them and I actually create a watch list, right? Where I can just easily toggle through, right? I think Investing Note has this, right? And of course, Investing Note uses trading view charts. So I'll be showing you some of the examples on trading view charts later too. Okay, sorry, just let me silence my phone. Cardinal sin. All right, now, okay, so that is kind of my way of how I go through a list, right? Especially when we're filtering for good things to look at, the good stuff to look at. All right, now doing the analysis, right? These are just some of the ways I do analysis. A lot of it revolves around this thing called Fibonacci, right? I will not try to confuse you guys today, but I'll be showing you how I roughly use it, right? How I roughly use it. I think in future sessions, you want to ask, you can ask Ethan to or arrange this kind of educational sessions. But yeah, technical analysis, right? It's only effective if you use it correctly, because there are many ways to use it wrongly, right? There are really, really a lot of ways to use it wrongly. Today, I'll be showing you some of the ways that we use it correctly, right? In looking for positions, okay? This is where the juicy stuff begins, all right? Now, let me just see where I can pull up. If you have requests for me to look at certain stocks, let me know. I saw someone send in, I think it's Chanan, right? Send in a request for OCBC and Capital Integrated Comtrust, right? If I have time, I'll take a look at it later, right? But I'm going to show you, right? I'm going to show you some of the ways that you can look at some instruments, okay? So this is TradingView over here, right? So one of the things that I do, instead of just looking at a 1 hour chart, right? On the 1 hour chart, so sometimes the problem with 1 hour charts, you're looking at it and you're thinking, okay, right? Okay, I got a request from Sun Huang requesting for Wilma. We'll see if we got time later for it. All right. But yeah, we're looking at this and we're thinking, oh man, look at this. It's good stuff, man. It's a trend line down, price is making lower highs, right? And you're thinking, okay, I'm going to short this this counter, right? I'm gonna short this trade, and I believe 1810 is sell me, right? You can play it lower, right? But an important thing to consider, is one thing that I always kind of recommend people to do is to first look at the higher time frame. Is there something that you are missing out, right? Instead of having that tunnel vision, looking at this right here and like, oh, yeah, I'm going to short, right? I expect prices to go lower from here, right? Okay, we got Hong Kong, we got SGX all coming in. Okay, anyway, so one thing I do, I kind of look at, I nudge it up a bit to the 4 hour chart. Okay, I nudge it up a bit to a 4 hour chart and I zoom back and I'll be like, whoa, okay, I see something here, right? It seems like there is this time over here. There's this time over here where price actually bounced off really nicely. And this was in March of 2021, so about 6 months ago. So for the past 6 months, price has not broke this level, right? No, sorry, it's not even past 6 months. It might have been longer than that, right? It's since the November of last year, price didn't break this level, right? So that's what it helps you do. So once you identify this movement here, maybe you just draw a line over here and you're like, okay, that could be one of the reasons why price, recently price kind of bounced up, because there was this big, what we call a swing low support from there, right? So that's the first. If there's anything I want you guys to kind of take note of, right, is before you jump into any trade, just do yourself a favor and look one time frame up. Okay, not 1 hour to 2 hour, but maybe 1 hour to 4 hour, 4 hour to 1 day, 1 day to 1 week, right? And see if there's anything that you're missing. So sometimes I'm looking at this, I'm like wondering, right? Okay, this bounce that happened, could it be a bigger level in the past, right? So I kind of zoom out a bit, and I realized that, okay, look at this thing over here, right? If you capture, I'm going to zoom in a bit. Price didn't manage to close above here previously, right? And if you take that level and you go all the way back to where we are currently, you notice that price had difficulties closing below this level, right? I'm going to zoom in a bit, right? It closed here, price pushed all the way down here. This is what I call price action, right? Came all the way down, came up. It tried to close down below here. It failed to do that, tried to close down it and it ended up closing above that, right? And then look what happened here. Price went all the way down. You're thinking it's going to close there, but by the end of the day, it closes here. So what does that tell us, right? What does that tell us? Is that, important, if anything, to look at the higher time frame. Right? Don't just go into tunnel vision and seeing the 1 hour chart and thinking, okay, I believe price is going down, not realizing that on the 4 hour chart is a big level, and on the 1 day chart is a super big level that stretches all the way back to 2018. Right? So these are some of the things you can consider when you're doing technical analysis on stuff you want to trade. So this right here in trading is what we call an inflection point. Right? An inflection point is a very big level of what we call decision. It's make or break. Right? If it holds, it's great. If it closes below here, right? If price finally is able to close below here, right? We could be seeing a big move down, right? How far down? I'll be showing you later how I can kind of project that using Fibonacci, right? But if anything, if it's not able to do that, we might be seeing, an explosive move upward like you see over here, right? Is this enough, going from 21 to 28, 21 to 27? Is this enough if you're going in big to get you one of the top 10, positions, or maybe trade of the day? Potentially, right? It could be an explosive move, right? So usually, we are in luck today where, just so happen, right, that today we are seeing this move over here, right? And price, clearly, there's a little bit of price action saying that, wait a second, I'm not, it's not over for me yet. I'm not going to just drop down here. There's a lot of buying pressure over here. You back this up with a couple of things, okay? So let me just do this thing called what I call a Fibonacci projection. So one, let's take 3 points, and price tends to like to bounce off the 61.8 level. So true enough, seeing 61.8 over here, we're seeing price bounce off here exactly, right? It's looking for this kind of zigzag kind of movement, right? You can see price actually touching this level, and there is potential for it to kind of bounce up, okay? So those are, so not only do we have a nice support level, right? We have a nice 61.8 extension. We have a nice price action, right? So we got 3 things, and I believe if I do a Fibonacci retracement, all the way from the bottom to the top, picking the bottom right here, we notice that price is also testing this thing called the 50% Fibonacci retracement, right? So it's right there. So now you have 1 reason why it might bounce up, right? You have 2 reasons why it might bounce up. You have 3 reasons at 61.8 over here why it might bounce up. You got 4 reasons why it might bounce up, right? Because of the price action here. So looking at that, you naturally have a pretty decent chance, right? So I'm going to pull up this thing called the stochastic. I'll show you how I use it slightly differently, right? So I kind of tweak the settings to 2153. 2153. Okay. 21, sorry, it's not 2153, is it? 3453. Sorry, just let me pull up two things real quick. See if there's any big levels we can look at. Yep, there's definitely a nice level we can look at. Okay, I'll be showing you a slightly different way to use RSI, a slightly different way to use stochastic. Okay, so you know that. So we can see that where the previous bounce occurred, right? And this is a tricky way to use stochastic. Okay, where the previous bounce occurred, I'm just going to draw this little horizontal vertical line, right? Where the big bounce occurred previously was here. Where price took off previously was over here, right? So you can combine it, right? You can combine it, and you can roughly find the hidden support level. Okay, just to help you see things a little bit clearer, I'm just going to remove all this fancy little stuff, right? And we can see right here that the previous 2 times where price did a super big bounce, right? Where it kind of took off, right? Which one time was over here, another time was over here, right? It also corresponded with stochastic being at the 8.55%. And guess what is happening right now, right? What is happening right now is stochastic is right there, and stochastic is bouncing off and price is bouncing off. Is there a chance that, we could be seeing a nice little bounce that history repeat itself, in the past 3 times price touched this 8.55% level? There's a decent chance that that would happen. Okay, So yeah, this here, right? Kind of sticking my neck out for it. I just, disclaimer to a disclaimer, if this trade doesn't go according to plan, don't come and hunt me down, right? I got a gut cat to kind of protect me. Right. But yeah, this is one of the key things I'm looking at, for price to make a nice little bounce from here, right? A nice little bounce, right? How far price likes to bounce. Usually I look at, a little bit hard to say, but I like to look at the 23%. So if I'm going to put a level to it, it might bounce first to the 23.2 and then maybe to the, and then maybe to the 24.65 level, right? These are levels, right, where price might bounce to. Okay, a little bit risky, literally kind of catching a knife kind of thing. I'll be looking at this trade tomorrow, hoping that it bounces. Right, but yeah, so this will be kind of one of it that we're kind of look at. All right, I can see a lot of requests coming in already. Right, but I will show you some nice little setups that I'm seeing. I'm going to show you some other nice little setups that we're looking at. Okay, the other one that we're looking is what I call, it's actually Meituan, right? So this is the thing in Meituan, right? If you look down here, right, being super wary of time, right? I nothing to finish. Okay, being super wary of time, I'm just going to touch on this really quickly, right? So with Meituan, right, if you look at it on the shorter term, right, yeah, it does look bearish. Right. So one thing I like to do, right, is that sometimes when you're looking at the shorter term, you don't see if there's a bigger pattern at play, right? If there's a bigger pattern at play. So what I do again is I like to go into the 1-day chart. Right? I like to go into 1-day chart, right? And I draw this little, I draw a channel, right? I draw a channel from the top and I try to catch the bottoms here, right? So the rule of thumb of a channel is that, you need to minimally touch 4 points, right? You're touching 1 point, 2 point, 3 point, 4 point, 5 point, right? We got it touching the 6 point here and it's right about testing there. So it's right about testing there. And this is what I call another inflection point, right? Price is either going to make it or it's going to break it, right? And that's the fun thing about today's webinar, right? You get to you get to stake something, right? Tomorrow, right? Are you going to bet that Meituan is going down or is it going up? But looking at it right from here, right, the channel, right, is bearish. Right? I'm going to throw on a couple of indicators. I'm going to throw on the Ichimoku cloud, right? And lo and behold, right, the Ichimoku cloud, I only kind of look at the cloud. You can see that there's this big cloud that, price always kind of is having difficulties breaking past. Okay, so this is a nice thick layer cloud over here. So it kind of gives us an idea on like the kind of resistance. Right, I swear this Microsoft Edge likes to spam me with shit. Right, so anyway, yeah, we're seeing like this kind of Ichimoku cloud over here, descending resistance. Right, now we're thinking, is there a golden cross? So this is what I call a death cross. A death cross happened earlier. It's slightly useful, but it kind of tells us that when the 50 moving average goes below the 200 moving average, there's a lot of bearish momentum that's driving prices down. Useful, but a little bit messy. I'm going to take it away. Right. And then, of course, there's this thing of what we call an overlap resistance, right? A very nice overlap resistance, right? Where price tends to obey this level multiple times. One time, it's 2 times, 3 times. It might come a 4th time and reverse. Okay. Some things I'm looking at. Okay. So if you're looking at this just as it is, all right, I'm going to zoom out, see if I miss anything. Nope, I'm not missing anything. Right. So I'm just looking here. And there's what we like to do when we're trading is like we like to play from one resistance to one support, right? So if you're bold enough, right, this is the support that you're looking at, right, where price bounce off twice, right? So if you're bold enough, one of the big moves that could happen is that because of the descending channel, right, we got one good reason over here. Because of the Ichimoku cloud, we got 2 good reasons over here. Because of the overlap resistance, we got 3 good reasons over here. Right, we could be seeing price make a push down to here. Okay, we could be seeing price make a push down to here. Right, so something to consider. Right, something to consider if you're looking for some Hollywood trades. For next few days. Okay, man, we got a couple of we got Alibaba, SGX Venture, but I haven't shared with you guys all I wanted to share with you guys. But my last high probability call is this. All right, my last high probability call is this, right? Or actually, I do have one on OCBC, right? You know, for the guy who asked earlier. My last high probability call is on this, right? If I'm not wrong, it's Sunny, right? So what do we expect with Sunny? Okay, what do we expect with Sunny? Now, one thing I'm looking at over here, if from a technical perspective, okay, there is this super big level over here. Why is it a super big level? It's because we call it inflection level. Price react off one time, it react off another time. Okay, so it finally broke past, right? And when price came down, it bounced one time, it bounced two times, and bounced, and it's now at this level over here, right? So you can see price is obviously, this is not any ordinary level, the 205 level. It's a big level, right? A lot of eyes are on this level currently, right? And you can see that, you know, there have traditionally been a lot of buyers, right, who has been pushing prices up from here. In this case, you know, otherwise you wouldn't see all these long wicks. Every time price touches this level, someone's buying it. Okay. Now we're back at the level, right? We're back at the level. This is is not the strongest, but it's a bullish price candlestick pattern, right? We might see a bounce, right? Strictly looking at things, you know, we are in an uptrend. We are in a bullish trend where price is kind of going up and up and up and up and up. So we could be seeing a bounce from here, a pretty explosive one, looking at the amount of movement that kind of goes in a day when price touches these levels. It can go pretty explosive, right? In the next day, what can happen is that there could be a pretty good chance, if all these buyers are something to go by, right, is that we could be seeing a nice little bounce from here. We could be seeing a nice little bounce from here. Even just using Fibonacci, I think we can find that price is testing the 61.8. Lowest it might go 78.6, but we should be seeing a little bit of a bounce from here. Okay, it's definitely something to look at. I wonder, is this a trend line? You know, a little bit far away, can't really use it, right? But one of the interesting things to look at. Okay, now yeah, I'm slightly bullish on this. I'm slightly bullish. I know it's a little bit scary because price has been dropping and dropping and dropping and dropping, right? But you know, nothing venture, nothing gain, right? So yeah, if you're looking for explosive moves, this is one of it, right? Of course, a quick recap, this one, you know, if price happens to close below, right, the 21.75, there is a high chance that we can be seeing price drop. But what we're looking at currently, you know, there is a decent chance that we should be seeing a bounce from here. Just looking at price action, I will be calling a bounce. Okay, now the last one that we, hopefully, I'm not sure the last one, but maybe OCBC, right? Because one of you guys did request for OCBC, right? One of the things that I'm going to look at OCBC, right, is this the pattern over here, right? So the thing about OCBC is that there is what we call a pretty nice, I'm not sure I can get it right here, pretty nice overlap resistance. Okay, a pretty nice overlap resistance. So same thing what I call overlap resistance, you know, price refuse to break the level, right? And when it finally breaks the level, you know, it has separation anxiety, right? It comes back here and it comes back down, right? And then, you know, it's gonna have separation anxiety again, right? And people are just trying to come up here. And what happens when you're here, you know, there's a high chance that price might reverse. Okay, so it's a little bit more way, you know, it's not exactly there yet, you know, still needs to kind of, maybe you could put a pending order to kind of get in there, right? But why I like this trade, is because in Elliott wave theory, right? In Elliott wave theory, there's this big thing called the 23% retracement, right? There's this big thing that's called a 23% retracement, right? And the 23% retracement, if it's broken, the next big level that you're looking at is the 38% retracement, okay? And price clearly respected this 23% retracement multiple times. So much that not only has it broken, but it's made a pullback. I expect it to make another pullback before dropping, you know, to the 38% retracement, minimally the 38% retracement that we're seeing over here. So this could be another decent move that we are expecting on OCBC. I wouldn't say it's a 10% drop, maybe an 8% or something, right? But, you know, if you get in at a good level, right, this is one of the things that we look at. And for those other technicians out there, you have noticed that there is something like a triple top pattern over here, right? And these triple top patterns, right, when they break, right, there's a high chance that it will realize its potential by traveling down the distance of its, you know, how high it went. right? So we could potentially even see it dropping all the way lower down. But yeah, this is something which this is definitely one of the instruments you can look at, right, to play the explosive move today. Right, we do have quite a number of requests coming in. Let me see. So Wei On is asking, talking about 2 to 3 time frames to take a trade. Are there instances that the 15-minute and 60-minute and daily charts all align to give a buy or sell signals, or at least 2 of them? Yes, there is, right? So that's what we call a top-down approach, right? So you don't just, when I'm looking at a chart, right? I don't. If you use a higher time frame, it gives you momentum. So in this case, right, if I were to look over here, right, right, this gives me the momentum of a trade. In this case, I'm overall bullish, right? I then go into the 4-hour chart and see how I can trade this, right? How I can further fine-tune my entry on the smaller time frame, right? But I usually combine 2 time frames, because you combine into 3 time frames, it becomes a little bit too what's the word for it? It's a little bit too granular, right? But what some people can do, right? What some people can do is that, imagine if you're on the 1-day chart and you're calling a bounce over here, correct? And you're wondering where to buy. You can actually go in on the 1-hour chart, right? And I'm going to remove all this, right? And on the 1-hour chart, you identify this as the first level to be broken, right? Because of this pullback level, right? These are like little steps, right? So if it breaks this level, then you decide to go long. So this is on the 1-hour chart, but you got your view from the 4-hour chart, you got your view from the 1-day chart. Okay, so this is kind of how I look at it. We're going to take, let me see if I can take a quick look at venture. Let me see if I can take a quick look at venture, if there's anything I can look at. Venture, I guess, really nice level. First thing I highlight is that it is on a super big level, 18.04. Okay, 18.04. We got Lean asking, is it better to trade 15-minute or 1-hour chart? It depends how long you're holding, right? But on the shorter term time frame, there's a little bit more noise, right? So you might not be able to get such a nice entry. Okay, or rather you might be whipsawed out quite a bit, right? If you're looking at venture right now, right, I do see bounce and bounce and bounce, right? Historically, how low can you go, kind of thing? Probably over here. This is the next big support. Just using pure support and resistance before, instead of us going all crazy with Fibonacci and stuff, right? But where I think price might bounce to in this case, right, is I'm going to do one thing, right? I'm going to pull out my handy dandy RSI. I'm going to see if there's divergence. Okay, I'm just going to use stochastic for this. I want to highlight one thing, is that from this bounce to this bounce, there's no divergence. It looks like some support. Looks like it bounced previously, right? So the past few major bounces that it occurred, right, seems to occur around this level. Price seems to be about that level too. So yeah, without diving too much into analysis, right, there is I think there's a decent chance that we might see a little bit of a bounce on venture. I know it's a little bit bearish, it's a little bit risky to kind of catch a knife here, right? Say catch a falling knife, right? But it does look pretty nice, right? Okay. Edgaras. Edgaras, nice way to tune in all the way from which country is it, right? You follow me at IC Markets, right? But no, I can't look at GM either. Lithuania. Okay, nice, right? But yeah, but that covers it for today's session, because what I'm gonna do, sorry, I can't look at Singapore and Hong Kong stocks only today, bro. So yeah, this covers a large chunk of what I'm going to look at, right? You guys know some of the explosive moves, right? I'm just going to tell you what they are again to look at. Xiaomi, Meituan, Sunny, OCBC, and I have a hidden one on Tencent. Go do your own analysis on it. If you can find it, it's pretty good, right? But without further ado, right, I'll be now passing the time on to our good friend Marcus, right? And he'll be giving you an insight on how you can use DLCs for that leverage return on most of these underlying stocks. All right, Marcus, over to you, man.
Thanks a lot, Desmond. Hi, everyone. Hi, my name is Marcus. I'm from the Societe Generale, French bank. So we are the product issuer of the DLCs. So I think Desmond's part is super exciting. I think with all his different analysis, even I am also a bit like, excited about start of trading tomorrow. Can't wait to count down to the start of the trading day. But there are a few things that he mentioned that really strike me. One would be, one thing is inflection point, right? So that's where you sort of have the confidence that maybe the underlying will make a certain move, a strong move up or down, whether it's up or down. But then it is the most important thing, as someone wise once told me, if you want to make money in the market, it's very important to have a view, right? Whatever view it is, whether is it you are bullish or bearish, you must have a view. And then it's at these inflection points where you are able to have that view. And instruments like DLCs, which are a leverage instrument, allows you to be able to also have the flexibility to go long or short. At these inflection points, if you are bullish on it, you buy the long DLC. If you are bearish, you buy the short DLC, to be able to express your view in both directions, rather than just buy and hold. You are not an investor, in a sense. If you are a trader, then you must have an instrument out there that allows you to go in both directions. You can't just play the market in one direction. And the other point that he mentioned also is, Desmond mentioned is nothing ventured, nothing gained. And then he was looking at shorter time frames also, So these are really interesting because, it is true that you have to have a view, you have to venture before you can make any gains. And also in the shorter time frames, your stocks like your OCBC or like your DBS, they move 1-2% a day. I think so, around there. You probably have to put in $1 million if you want to get like $1,000 of gain, So it's like, wow, okay. So if you are a trader also, you must look at certain instruments that can give you that kind of leverage that allows you to exploit short-term trends in the market. Even if with the DLCs itself, if OCBC or DBS moves 2% a day, with that 5 times leverage, you get a 10% move, and 10% is a decent move if you are an active trader. 10% a day, you can make some decent sort of returns. With 2%, it's slightly hard, in terms of that the risk reward might not be there for you in that sense. So I think the DLCs is something that I would like to introduce to everyone. So I'll just take like 5-10 minutes just to introduce to you guys what the DLCs are about. And then if we have time permits, maybe Desmond can go through one more underlying that everyone really wants, because I think that's really exciting as well. But I'll just share my screen now just to go through a bit of the DLCs, and I'll use our SocGen DLC website, which Desmond gave you guys a teaser of just now. So you guys can see over here, dlc.socgen.com. That is the website for the daily leverage certificates, the DLCs, that is issued by Societe Generale. It is an exchange listed product, which means you can trade it, via your regular stock brokerage account, on your Phillips Poems account, your UOB Kay Hian U-Trade account. You can even trade it on Tiger and Futu. So this is readily available in your stock brokerage account. You don't have to open a separate account to trade it. You don't have to put in, you don't have to, have any, as long as you're SIP qualified, in the sense, specified investment product qualified, you will be able to trade this product on your regular stock brokerage account on SGX Securities market. So it is an efficient tool for you to be able to express a leverage sort of view on the underlying asset. So DLCs is exchange traded. It allows you to take a leverage exposure to an underlying asset, whether it's equity index or a single stock. So all the underlyings that Desmond mentioned just now, Xiaomi, Meituan, DBS, Venture, OCBC, we have the DLCs on them. We have over 200 DLCs listed on SGX securities market, and then you are able to express that 5 times long and short view on the underlying stocks. And in DLCs itself, we have 5 times leverage on the single stock underlyings. So 5 times on both the long side and the short side, 5 times leverage. And then on the indices, such as your MSCI Singapore Index or your Hang Seng Index, we have offer up to 7 times leverage. Okay, so how does DLC work in that sense, right? So, but first, there are 2 types of DLCs which you might have caught on to what I just said. There are a long DLCs and a short DLC, right? So for this long and short DLCs, you are able to express a view of the underlying asset. If you believe that underlying asset is going to do a bounce, that's what Desmond mentioned. You want to capture this short bounce, you buy the long DLC 5 times long DLC on that particular underlying asset to be able to gain that exposure. If you feel that it might break the support and it goes down further, you want to express a bearish view, you can buy the short DLC to gain that view. So how do DLCs really work in that sense, right? You buy long DLC, you buy the short DLC, but how do you see your performance, right? So this 5 times performance is the leverage factor, right? So the DLCs provide you with the leverage exposure on the underlying daily performance. So if DBS, for example, DBS stock, is up by 1% today, right? Then this 5 times long DBS DLC will be up by 5%. And correspondingly, the 5 times short DBS DLC will be down by 5%. Similarly, if DBS stock is up by 3% today, then it's times 5. So the 5 times long DBS DLC will be up by 15%, while the 5 times short DBS DLC will be down by 15%. But if DBS stock itself, drops by 3% today from yesterday's close, then the 5 times short DBS DLC will gain 15%, while the long DBS DLC would decline by 15%. So every day it gives you that 5 times performance based on the underlying performance. If DBS is moved by 1%, then my DLC will move by 5% correspondingly. Okay, so it's simple. Every day, it just gives you that 5 times leverage exposure, a fixed 5 times leverage exposure every day. So that is how DLCs work. So it's relatively simple in terms of, linear in terms of its pricing. Okay, and I'll introduce you some tools later to just see how you're able to see the price of the DLC moving in line with the underlying asset. Okay, as I mentioned just now, is that there's a long DLC and a short DLC. If you want to bullish on the stock, you buy the long DLC. If you're bearish, you buy the short DLC. So in both cases, you buy something. All right. So do not go and short sell this instrument in the SGX market, because then you end up in the buying market and then someone has to bail you out. So short selling is not advisable on the DLCs. So please do not do that. Okay, so if you're bullish, you buy the long DLC. If you're bearish, you buy the short DLCs. These are two separate counters listed on SGX. And then you can see the list of counters which Desmond showed you just now. So there's a stock code for each of the DLCs. And then in the DLC name, you can see for itself whether it's a long or short DLC, right? So you look at it. In the front of the DLC name, you'll see the underlying name, whether it's Tencent, DBS, or Meituan. It will show there, followed by the leverage factor 5 times. And then also, whether it's long or short. SG being the Societe Generale, we are the issuer of this name, of this DLC, and then the expiry date in year, month, date format. So the expiry is usually long dated, can be 2 years or 3 years. So you don't have to worry too much about the expiry. When it comes, every day we just give you that 5 times performance, and then the day before the expiry, if the DLC is worth $2, then the cash settled will be cash settled to you $2 times how many units you have by CDP into your bank account. Okay, so there is no in the money, out the money, at the money, or no optionality like some of you might have traded, options or structured warrants. This is not an optionality type product. This is a pretty linear price product. So there's no concept of in the money, out the money, etc. Okay, so in that sense, this is just a very more detailed example of the P&L calculation for the DLCs. But then you can see for yourself, it's just basically the same principle of if the underlying stock is up by 2%, then your long DLC is up by 10%, basically, and your short DLC is down by 10%. In essence, that is how it works. Okay, you can have a look at it in terms of a more detailed calculation on our website. I'll just jump straight into, I mentioned that this is not option type product. So it's not like structured warrants. It is not like options. It is more of a linear product. There is no optionality in it. But also another difference on this product versus other leverage product out there is that it's not a margin product. Okay, so other OTC products out there like CFTes, you put in $2,000 as margin, and then you can trade up to $10,000 worth of exposure, correct? But in DLCs, the same thing is applied as well. You put in $2,000, and then you can get that notional exposure of $10,000 on the underlying stock times 5 leverage. But then it is not a margin product, so you will never get the sort of margin call in that sense if there's adverse movement in the underlying stock. Okay, the leverage is inbuilt into the product itself already by that 5 times movement every day. And so maybe just a bit of a quick comparison with CFDs itself, both have its pros and cons. One is a listed product, DLC is a listed product, whereas CFDs is an OTC product. It's not traded on the exchange. It's provided by other CFD providers out there. So one of the pros of DLC versus CFDs is, if you are more of an active trader, you trade intraday. Some people are mentioning 1 hour time frame just now. So that would definitely classify you as an intraday trader per se. If you are an intraday trader, you will be more conscious of trading commissions, right? So for DLCs, you put in $2,000 and then you can trade up to $10,000 of exposure on a DBS stock. Your commissions that is charged is based on that $2,000, okay? So that's the commissions that is charged by the broker. But if you trade CFDs, right, if you put in $2,000 as margin and then you can trade up to $10,000 exposure, your commissions is charged on the $10,000. So in a sense, the commissions are 5 times more expensive on the CFDs versus your DLCs for the same notional exposure. So the DLCs do offer cheaper transaction costs if you are, a very active trader in and out, in and out, in and out. So that's one of the pros versus the CFDs. One of the cons, I guess, to just have a balanced approach there is that DLCs is really it has a certain feature that CFDs do not have, which is the compounding effect, feature, which can be good for investors or not, or it might not be good for investors depending on the trend of the market, which I'll explain in a bit. But this is a feature that's unique to the DLCs that CFDs do not have. And then so just something to watch out for when you look at different leverage instruments out there. Which one should I choose? You can also look at our sort of brief description over here on our website under education to compare the different sort of leverage instruments out there. But I would like to just touch on compounding effect for like 2 or 3 minutes, because this is a very important feature for the DLCs. So every day, you get that 5 times performance, right? DBS is moving by 2%, so my DBS DLC moves up or down by 10% respectively, times 5 movement. That is on a close-to-close basis. Every day, it gives you that 5 times performance. But if you hold the DLC for more than 1 day itself, this leverage factor does change in the sense because, the 5 times only sticks with a close-to-close basis. But if you hold a DLC for longer than a day, or you hold it for a long time, then you would see that, that 5 times performance is not what it will vary from the 5 times performance. So, this DLCs is more of a short-term trading instrument, even intraday, but up to maybe say, a few days or 2 weeks or 3 weeks. But I definitely would not recommend anyone holding it for long-term. Okay, this is not a buy and hold product. It is a short-term trading instrument. So in terms of the effect of the compounding effect, I mentioned compounding can work for you or against you, right? So a positive illustration of a positive compounding would be, let's say, look at this example here. If HSI moves up by 2% for 3 consecutive days, at the end of the third day, it's up by 6%, right? Every day, the 5 times daily long DLC will give you 5 times of that performance. So 2 times 5 is 10%. So every day, it will move up by 10% from $2.75, $2.50 to $2.75 to $3 to $3.33. So that's a total of 10% every day, right? But in total, it's up by 33%. So that is more than 5 times the performance of the underlying asset. If Hang Seng Index times 5 is 30%, right? But my DLC has given me 33%. So this is an effect of a positive compounding, because every day your gains are locked in, and then the 5 times is based on this higher value every day. Okay, so that's positive compounding. Also, in the terms of a falling market, you will lose less than 30%. You can see here Hang Seng is down. Hang Seng Index is down by 2%, 2%, 2%. And correspondingly, the DLC is down by 10%, 10%, 10%. At the end of the day, the Hang Seng Index is down by minus 5.8%, but my 5 times daily long DLC is lose less than 30%. So that is positive compounding in a sense. But where the compounding effect will not work for you in a sense is in the case of a sideways market. So I think when you trade the DLCs, you got to have a bit of conviction there in terms of what the trend will be. Whether is it, especially if you hold it for more than 1 day. If you hold it for more than 1 day, you got to have some conviction as to, is it the trend going to be up or is it going to be down, before you trade the DLCs. So over here, you can see the Hang Seng Index is down by 3% on the first day, down by 4%, and then up by 9% on the third day, bringing it back to 1.5% up across the 3 days. Whereas the DLC itself at the end of 3 days, it is down by minus 1.2%, even though the Hang Seng Index is back at 1.5%, because every day, the gains and losses are locked in, right? So even the recovery at the end might not be able to help it to recover back to the same level. So if you trade the DLCs, you should be aware of this compounding effect. The compounding effect gets worse to a certain extent if you hold it for long periods of time. Therefore, I think what I would urge everyone is when you trade the DLCs, it is on an intraday to a short-term basis, a few days or a few weeks, but definitely not for you to hold long-term. Okay, so this is the compounding effect, which I think I want everyone to be aware of. Just to navigate a bit of our website, I think if you look here on the DLC website, you can see a lot of information and tools available for you to use. You look at our search bar, like what Desmond mentioned just now. Okay, you can look for the underlying itself to see, what are the instruments out there for you to trade the DLCs. And then another important feature, just mentioned, see, this is where the 5 times performance comes in. CNOC made a big move today. It was up by 5% today over here. And you can see the DGQW, the CNOC 5 times long DLC, was up by 26%. So that's about 5 times that. That's where you can see that 5 times performance every day. It is up by 26%. Okay, and this is the intrinsic close value which I want to introduce to everyone. It is the sort of the final mark-to-market value of the DLC at the end of every day. Okay, so today is the intrinsic close value is at 1.34. Okay, then the next day, the 5 times performance is based on this 1.34. Okay, it is based on this value that is published on our website every day. It is might not be the same as the last traded price on SGX market that they publish, because sometimes the last traded price can be traded at like 2 p.m. or 3 p.m. But CNOC is still moving from 3 p.m. to 4 p.m. right? It's still moving in a sense. The underlying market is still open. Therefore, this last intrinsic close that we publish every day on our website is the correct reference level to see where the 5 times performance is for the next day. Okay, so this value is quite important for anyone who trades DLCs. Okay, so you can see this is a 5 times movement, and also correspondingly, you can see also the 5 times short CNOC DLC was down by approximately minus 25% or so. That's where the 5 times performance is. So this is how you can see where the 5 times movement is every day for the DLCs. Okay, and I think just look at some of these. So Desmond mentioned Xiaomi, right? So just to illustrate a bit of the compounding return, over the last 21 trading days, we saw that Xiaomi 5 times short Xiaomi DLC DCCW. Xiaomi was down by minus 12.5% over the last 21 trading days. This is plus 75%. Okay, so this is where you get that positive compounding effect. It's more than 5 times that of minus 12%. Okay, so you can use our historical compounding tool over here to see what has the compounding effect been like for the DLCs over here for each of the DLCs. Okay, and then you see Xiaomi. Just to touch on Desmond's one of these calls on Xiaomi. He was looking at the there could be a bounce, right? I guess. So we look at the long DLC. So you can see all information here, but one important thing that you can see is the price matrix. So this illustrates to you what is the movement of the underlying stock corresponding to the DLC move. So if the Xiaomi, sort of stock moves up by, 13% up to $25 Hong Kong dollars level, in line with the bounce that maybe Desmond mentioned, then you see, sorry Desmond, I know you're laughing, but I don't mean to, make you take the bullet even more.
Stress.
But I'm sure you get this right. And then the DLC itself, if I bought it, at 0.176 at the close today, tomorrow, if indeed Xiaomi goes up to, 14%, then, by 14%, then my DLC will go up by correspondingly by 69%, times 5 of that to a level of, 29.7 cents. That would correspond to the movement over here. So this price matrix is useful for traders to see within the day, if indeed the underlying goes up, where would my DLC move to in terms of the bid, in line with the 5 times performance as well. So how would it move in line with the underlying gain? Okay, so it might go down also if Xiaomi indeed, goes down over here. Okay, so this price matrix is very useful as well for everyone to use to see intraday. Okay, so I think that's all I wanted to share on the DLCs. One last very important thing on our website is this DLC hotline. So our number is 6226-2828. We can also write to us under contact us. That is a very important number. This is heavy on your speed dial. If you have any questions about the DLCs, anything that you want to ask about our market making. Oh yeah, sorry, I forgot to mention one point is Societe Generale, we are the issuer, but we are also the designated market maker, which means that we will be on SGX market daily to provide liquidity for investors to buy and sell their DLCs without any, much issues in a sense. We are obligated to be there throughout the trading day for you to buy and sell your DLCs. Okay, so you can call us anytime if you have any issues trading the DLCs, or if any questions regarding the DLC features. Please do call us over here, and we'll be happy to. My team and I will be happy to address any of your concerns. Okay, not sure if you have time for one more of Desmond's calls. No, I guess not. Okay, sorry about that. But yeah, in other words, I'll let Ethan finish up here.
All right, thank you, Marcus and Desmond. I think that's a very comprehensive, breakdown and explanation of how the DLC works on the SocGen website. Guys, please go to the SocGen website and you can actually see the live prices of the Hong Kong stock market and the Singapore stock market, if I'm not wrong.
Correct, but you still have to trade it through your regular stock brokerage account. So you will look at the SocGen website for the information, etc. But the buy and sell, you can buy and sell the DLCs readily on any of your stock brokerage accounts. Yep.
Yes, just to talking about brokers, we actually are partnering with 3 brokers. If you're part of the Singapore Active Trading Tournament, right? We're partnering with Mumu, Tiger, and Philips Securities to actually give you guys, promotions and rebates as well. Do check it out on our tournament website. All the details there. Yeah. All right. So for the people who have not placed the trade in the tournament, what are you waiting for, right? So how the DLCs work right now. You have an idea, and Desmond have provided some interesting stock ideas that you can potentially look at this week. Go ahead, place the trade. Okay. All right. So without further ado, we will end this webinar here. We're a bit tough on time, right? So do place the trade tomorrow morning at 9 o'clock. All right. Okay. Thank you, Desmond, and thank you, Marcus. We'll end here.
Thanks, everyone. Thank you.
Thanks, everyone.